Introduction. The world today revolves around credit. Need a new car? Use credit. Want to pursue higher education? Use credit. Want to purchase a house? Use credit. The importance of credit, especially in this day and age, cannot be stressed enough, but many people do not fully understand how credit works and how one can turn bad credit into good credit. Not all types of credit are bad, and having good credit can actually help someone's financial situation. In this video, we'll go over the pros of good credit, the cons of bad credit, the different ways you can improve your credit score, and why a good credit score is so vital in today's Introduction. The world today revolves around credit. Need a new car? Use credit. Want to pursue higher education? Use credit. Want to purchase a house? Use credit. The importance of credit, especially in this day and age, cannot be stressed enough, but many people do not fully understand how credit works and how one can turn bad credit into good credit. Good credit and bad credit. From the name itself, good credit refers to a high credit score of an individual, usually graded 700 and above, which reflects the good borrowing and paying habits of the individual in question. On the contrary, bad credit refers to a low credit score of an individual, usually graded 600 and below, which reflects the bad spending and repaying abilities of the individual in question. Benefits of having good credit. Some people are immediately put off by the word credit, as they associate it with unsettled or ongoing payments. But good credit does exist, and more often than not, it helps those who utilize the credit system greatly. For example, landlords are more likely to rent you an apartment or housing unit if your credit score is green. In some cases, recruiters also look into one's credit score, so having a good credit score not only helps one in finances, but a good credit score can also help someone land a job. A good credit score is also directly linked to having easier credit approval. If you want a mortgage, a new car loan, or a new credit card, then you have to make sure your credit score is in good standing. Not only this, bankers and lenders are often offered lower interest rates because these lenders are more confident in a person with a good credit score's ability to pay back. Same thing as if you were giving an allowance to a family member or friend. You want to make sure they promise to pay you back and not lend money to someone who might be shady, or in other words, may have bad credit. Lastly, one of the biggest advantages of having good credit is that banks and lenders often bump up your credit limit, allowing you to apply for more expensive credit applications. Consequences of having bad credit. On the other hand, a bad credit score has grave disadvantages since credit score is a reflection of the spending and repaying habits of the users. Banks and lenders will have more doubt in granting credit to those with a bad credit score. Because of this, these lenders will often restrict what you can do with their credit cards. For example, to discourage spending on more expensive credit applications, those with bad credit scores usually see more expensive car loan prices and higher mortgage rates. And while those with good credit scores are more likely to land a job, the inverse is true as well, in that those with bad credit scores can have their job hunting chances cut short. Even starting out a business is affected by credit score, as it's harder to obtain a business loan or a business credit card with bad credit. How to improve your credit. But having a bad credit score isn't a life sentence. There are tons of ways to improve it, and you have the power to change it. Conclusion. The use of credit has become commonplace today, and to fully utilize the credit system, one should strive to have a good credit score.